Hi, everybody. This is David Skrika. So I'm going to get into this. So yeah, now the way everything's set up, by the way, I'm going to set up a website for stock chart of the day as well. It's basically going to be the same as Addicted to Profits. It might be a little nicer, but anyhow, so what I'm going to do with this is really simple. I'm going to do our stock chart of the day, Monday, Tuesday, Thursday, Friday. You know, but not always YouTube videos or whatever, streaming videos. Sometimes I might do a podcast, and sometimes just the HTML page. And then every Wednesday, we're going to have our update. And our update would either be an interview, one of these educational videos, historical videos, or I'm starting a new series, The Greats, The Legends of Investing. We're going to start with John Templeton, because like myself, not that I am anywhere near in John Templeton's league. I'm not. He lived in the Bahamas. So, and then we're going to, I don't know. The Legend of Investing might just be like once a month, because there's only so many I can do. If I do it once a week, it's going to be like, once every month, maybe once every 2 weeks. The nice thing about getting off a subscription model is I hated the structure of it, so I just like the fact now I can do whatever I want. So what we're going to look at today is bullish scenarios. A few weeks ago, I looked at bearish scenarios, and but the market rally has been very long. 8 months going, from October to June. Bear market rallies usually do not last that long. Obviously, you can see corrections in bull markets, and I think that's what we may see here. So anyhow, which I'm going to show you this right now. And but like I'm thinking that I'm going to show you a bunch of bullish kind of scenarios, right? Right now. So what we're going to look at here is there's a couple things. This is how I'm going to start here. We're used to, other than the COVID crash, as I call it, we're used to these very long bear markets that last, year and a half to 2 years, in the last two, but bear markets, and then very long bull markets. Like really, this bull market lasted nearly 11 years, and then this bull market here lasted that was a whole in the 90s, and then even this bull market lasted about 5 years. So we're used to it. What we're not used to is kind of what happened in the 70s, right? At the 1966 bear market, etc. So this is very similar to 1966, and I found this chart when I was doing some of my research, and what it shows is this is the green line, which is 1966, and the gold line, or whatever color that is, is 2022, and you can see it's very similar. Both markets peaked in January, both bottomed in October. The rally has been weaker this time. Like we're probably about here price wise, but we're like here, time wise. So, but if something like this were to happen, we were to rally, it would like continue into 1968. And to continue on that, this is the 70s, 60s, 70s bear market, which I think we're in something similar with high inflation, etc. Right? So this is the bear market here. This is the bull market here. This is the bear market here. This is the bull market here. This is the bear here, bull here, blah, blah, blah. And you can see that after the 66, the market went up into 68. So very similar, declined into a midterm year. The length of the decline was about the same, and then rallied into about the election, which is kind of what I think would happen. So, and also I think that right now we could be in one of these kind of little corrections at the moment, right? So anyhow, but this is the case. And again, like I said, we're used to these big, long bull markets, big, long bear markets. But what happens if we're in a situation right now where we're just going to see these, year to 2 year long bear markets, and then these, 2 to 3 year bull markets, rather than what we've seen the last 20 years, which is, 2 or 3 year bull markets, and then last really 30 years actually, and then long bear markets. So maybe something like that is playing out. So, and another reason, again, to get back to the rally right now, this is like the longest bear market rally I've ever witnessed or researched. And this is after the 29 crash. The market rallied from November to about March, which is roughly 5 months and rally 50%. Well, this time we've rallied, we'll get this chart shorter, we've rallied, for almost 8 months. And that's very long in the tooth, So can we go down and then back up? I don't know. And also with the stretch valuation, I'll talk about that in another video. It's hard for me to see us going to 6,000 on the S&P or something. Now could we top here? For sure. Why not? Everything's possible. We went down about 1,200 points. We're up about, 800. That's a 66%, retracement. Those kind of retracements can happen all the time. But I think it's just the length, and the amount of time. So we could see a pullback here, like you saw, if you go look at that 66 market, you can see little pullbacks on the way higher. So, that's definitely a possibility. So that if we go look at another thing I think that makes me kind of bullish is in 1994, the Fed began to raise rates. You can see the market had a bit of, let's shrink this a bit more so we can really see 94. The market had a bit of a correction, but held in there despite the fact they did all these rate increases and then took off and anticipated the rate cuts. And you can see really just had this huge run for years and years and years. Didn't have a significant correction really to this 97 correction. Had a small correction here in 96. But you can see really didn't have a significant correction till there. And I don't think we're gonna have that kind of bull market, but if we go look at interest rates, you can see, and this is kind of what I think is gonna happen with interest rates though. There was a huge move up, the market held in, and then the rate cuts were really did not take back a lot. Rates, you can see on this 3-year bond, rates went from under 3%, or 3-month bond, to about 575 and went back to about 480. So basically they went up nearly 300 basis points and then only went down 100 basis points. So that's kind of what I'd see happening if the Fed cuts. If we go sorry. So if we go look at the scenario here, the scenario here of the interest rates, they've priced in one more cut, and we can see by next year there's if you add up all these, so when they have one more increase, we'll be here, okay? But by January, they've got over 50% chance that last rate cut will be taken back. So again, unless there's some massive decline in the stock market and deflation and a bust, the market could just take off to new, there. And then if you look at the end of next year, again, we add up all of these. There's a greater than 50% chance that interest rates are at least 150 basis points lower than they were, or there will be at the top probably this summer. And even though the Fed says they're going to keep hiking rates, almost all the Fed funds futures, let's just go out to November, there's only a 1/4 chance right now of another rate hike. So these aren't perfect, but they do tend to do pretty well. And they were much more aggressive last year than what people were thinking. So, and again, 1994, if we go look at the 90-day T-bill now, first of all, it's starting to flatten out here. But if we go look at it compared to the stock market, look how much they raised rates, basically from 0 to over 5%. And if we go look at the stock market, the stock market has held in pretty good. It got whacked. I thought the market would fall 40 to 50% with those kind of rate increases. But, and you go look at stuff like housing stocks, like KBH, these things have been strong as hell, So, and again, you thought housing and higher interest rates would have gotten killed. And the housing prices have come down, but the housing stocks have really, really bucked the trend, right? Partly because there's a somewhat of a shortage right now. So anyhow, those are kind of my scenarios now, that we have a very long bull market. We have, and I'll show you one more thing. We have really it fighting off higher rates and the whatnot. So then we see this VIX comes down to 13 and go, oh, Well, the VIX volatility is low. That's bearish. But here's the problem with that kind of philosophy. Okay, the VIX was low here, right, in 2020 before the big sell-off. But if we go look at like 2015 to 2018, right? The VIX, when it's this low usually, and you can look even here, 2013, 14, 15, when the VIX is this low, you're usually actually in a bull market. Volatility, you have little spikes on the corrections, but usually you're in a bull market. So that's another thing to take into account, that the VIX is being this low might actually not be bearish and may be a sign. And again, if you go look at the history too of these bear markets, there's a real election kind of cycle where, this is back in the 70s. And this is where I think we're going. High inflation, kind of a sideways market for a decade. We kind of did that too from 2000 to 2009. And, so you can see here, 66 was a midterm year. 1970 was a midterm year. 74 was a midterm year. 78 was a midterm year. 82 was a midterm year. All bottoms basically for the market, even though in 78 happened basically at the beginning of the year. And then you can see the rallies actually into the election years. 76 being an election year, 1980 being an election year, 1972 being an election year. It peaked in January 73, and 68 being an election year. So that's kind of scenario I think is going to happen right now. I've kind of switched. I have some hedges. I think you always got to, I've learned my lesson from 2008, you always got to have some hedges. So, but like, I really think this is a good scenario right now, where we could potentially be, we could see one of these corrections, like look at here, blah, blah, blah. But we're probably in this kind of year to 2 year rally. And again, we're so used to like these big bull markets of the last 20 years. We're so used to like the market having these huge bull markets. I'm going to actually go back to 1990. That last 5-10 years, like the 90s, and then 2002 to 2007. And then of course, the 2010s, we're so used to these kind of big bull markets that we've forgotten there can be these bull markets that only last a few years. And even the last two bear markets were very long. They were about 1 year and 3/4 and 2.5 years. These are actually two, I think, if you look at the longest bear markets in history, these two are like in the top 5 ever, which shows you how long they were, right? And both of them were very steep too, nearly 50%, nearly 50% in 2002, and over 50%. So we're not kind of used to these like, 9-month, 20-25% bear markets, but they happen, right? So maybe that's what's happening now. And then of course, if I've said is, wow, one reason I stopped being so bearish for a while in the spring or even earlier in the year was that the inflation year over year was going to come down, and it has. And I bet you inflation will get back down to 2 or 3%. And that's when the Fed can start cutting, because they'll say, well, inflation is down to 2 or 3%. We're at 5%. That's where they might cut, to 3 or 3.5%. And of course, that will probably increase the next inflationary cycle. And then, it'll probably lead to the peak of the next stock market cycle. Anyhow, I just wanted to show you this. And I know a lot of people think I'm a perma bear, but I'm really not. I'm just very cautious. I don't like high valuations. I don't like to chase, et cetera, et cetera. So we're going to, I'll show you that at another time. But anyhow, I thought I'd show you this. I hope this was like, informative, but the way I'm playing it is like, we're buying these beaten up companies, in cannabis. I've got a few tech companies. One does some cloud service stuff. The other one does some cloud service. The other one does a streaming service. So I've got these beaten up plays that are off, 90, 95%. I think that if we enter a bull market and these companies can turn around their own kind of micro picture, that they're the kind of things that can go up, hundreds of a percent or something like that, So let's say the S&P goes back to its highs. The S&P from its highs from here is 11% or something. Well, I'd rather have something that can go up hundreds and hundreds of percent, even though in the short term it might lag, because these kind of turnaround plays take a while. The nice thing about these turnaround plays, these companies are so beaten up, even if the market were to fall 10, 15%, I don't know how much they would fall. you know, and especially if they don't turn around their own, their own circumstances. Anyhow, I'm going to leave it at that. I hope you enjoyed this. And so, like I said, stock chart of the day is going to happen Monday, Tuesday, Thursday, Friday. It may not always be a video. It may just be a post to the website. And then, and this is going to, I'm really trying to build it slowly. I know right now I'll probably just get a couple hundred views, which is like kind of my hardcore following. But the more you do it, the more YouTube picks up the algorithm, et cetera, et cetera. I'm going to start spending some money, to pick up more emails, blah, blah, blah. So, that sort of thing. So, it took me a while to figure out exactly what I wanted to do. I had the monthly newsletter on life support. It was bleeding me money, man. I had like barely any subscribers on there. And I kept, wanting to, and actually all the remaining subscribers I told, people earlier in the year, I told people not to subscribe to it because I was trying to figure out. And then a few weeks ago, I was telling people, I've been telling the last few remaining subscribers on it to get refunds. And actually I gave a few of the last remaining people complimentary lifetime subscriptions because they had been on the monthly list for so long. Anyhow, I hope everybody's good. And I hope you enjoyed this video. And I hope you enjoy. Oh, no, I can say so. Every Wednesday, we're going to do one of these educational videos. Or next week, we're going to have our first Legends of Investing. It's going to be Sir John Templeton. I got a really good idea for one of my Legends of Investing. And I hope it really works well. And I'm hoping I can get this person to actually, to interview. It's actually quite a famous person.